Good morning. Let's make a brief study on LPHI. This is the chart since the IPO back in it was 2000, I believe. There's some error here in this chart, and the stock well, it was kind of dead until here in 2003 when it had this recovery, but lately here since mid 2006 it had a nice bull run, which we can see better on this medium-term chart. Sorry, just a second. Okay, and the stock is above the 50 days and the 200 days moving averages, and it's definitely bullish. Some would say it is overbought here, way above the 50 days and the 200 days, and due for a correction maybe. Over the short term, well, this is what we can see. The stock had this big white Marubozu here, and it has been consolidating that move lately. It will probably continue to consolidate because it was such a huge move, but the trend is definitely bullish, and technical analysis is all about the trend, and so the chart is positive, and it indicates this stock will continue to move higher. But in fundamental terms, if we use my valuation model, let me try to explain this very quickly. These yellow lines are known facts, white lines are my estimates. I need to make 4 estimates, which are the dilution factor, revenue CAGR, final net profit margin estimate, and earnings per share multiple estimate. These dark yellow lines are calculated by this Excel spreadsheet. So let's start by this initial share price, which is $23.95, which is Friday's closing price. Initial share count 9.62 million shares outstanding. Dilution factor 1, which means I don't expect the share count to change because it didn't change over the past few years, as you can see here. This is the number of shares outstanding on a historical basis, 9.5, 9.6 million. So there were no changes since 2002, which is positive. So no dilution expected. Initial revenue 29.8 million. This is the revenue the company had over the past 4 quarters. And revenue CAGR 1.247%. So I expect 24%, almost 25% revenue growth going forward. This has been the historical rate since 2003, and I expect this trend to continue, which gives me a final revenue for 2009 of $58 million. Initial net profit margin. This is the net profit margin the company had over the previous year or previous quarter. Let me check that, just a second. Okay, I gotta pause the video. Yes, that this revenue, initial revenue, was for fiscal 2007, which ended in February 28th, and it was 29.8 million, and with this revenue CAGR going forward of 1.247%, it gives me 58 million for fiscal 2010. And the company had a net profit margin in 2007 fiscal year of 12.2%, and I expect this to expand to 15%. This is my estimate over the long term. And given this, the company will have 8.7 million in net income in fiscal 2007, which means 90 cents per share. If we apply the industry average earnings multiple of 1538, check that again. Look here, this is LPHI industry, which is the diversified investments industry, and it trades at an average PE of 15.38. And computing all this, it tells me the share price will be $13.86 3 years from now, just that. So I expect the share price to decline about 17% a year going forward, so I consider the stock very overvalued, so not attractive. On a 1 to 10 scale, I give it a 3. Thank you, bye.